traders, Raghee here, and today we're going to talk about a setup. We've been talking about a lot of concepts, dips and retracements and trends and not trending markets. Well, today's topic is about the last non-trending markets. And we're taking a look at the Russell. Now, I'll talk about the Russell as well as the IWM. And this is now the third time we're going to be looking for a fade buy. Now, what does that mean? Well, fade, as we've talked about in a previous free video, talks about the environment that we're in. This is chop, right? More formally known as distribution. This is a non-trending range-bound market. That's where the fade comes from. We're fading weakness. We're going to look to buy into weakness. The buy comes because we're at the lower end of the range. If this is the support area, this is the resistance area. So as we reach resistance, our sentiment turns more bearish. As we reach support, our sentiment turns more bullish. But the support is also really a zone in this case. Now, the first time we got to a buy, this was at the lower end of the range and this 200 exponential, represented by the simpler propulsion tool. The second time it bounced off the simpler propulsion 200. Now I'm going to be focusing on that again. So I will say this whole area is viable for the buy. This whole area is a good buy zone, but I'll be focused mostly on the support at the 200, which is the dots you'll see through here. I'll be focused mostly on the 200. So this will be the third time we're going to fade buy this chop. How do we confirm it's chop? Well, the easiest way to do it is just take a look at the bottom of the screen and focus on the structure of the market, which has been choppy pretty much all year long. That lower row of the JT multi, that's what we're focusing on to confirm this choppy market. If you have the Ready Aim Fire, great tool to further confirm an oversold buy. Use oscillators in choppy markets. Think about the word oscillating back and forth, back and forth. That's what you want to use in chop. You can even, if you don't have the Ready Aim Fire, which of course is a premium tool, you can go with a slow stochastic. I prefer a setting of a 21K 3D, so you can do that on just about any platform. And then I'm going to add to that, in addition, is I'm going to look at the V-score. And the V-score setting, what I'm really looking for ideally, is just a quick little move below the mean. We are below the mean. A quick little move below the -1 V-score, and then we'll move higher. Because take a look at the previous times we've bounced. Take a look at this low here. Take a look at this low here. Take a look at this low here. Take a look at this little dip below that -1 standard deviation. Notice it's not in conjunction with an even triple bottom. The volume standard deviation, which is what the V-score is measuring, doesn't care about an even triple bottom. It's really looking at volume as a way to identify exhaustion. So if that volume coincides with the 200, we're in business, and that is what I'm looking for. And this is where I'll get long the IWM. This is the choose your own adventure. Choose your own adventure via mini Russell futures, micro Russell futures, or you can get into the IWM. Again, remember, this is a trade that I'm expecting could go a few days or longer, maybe a couple weeks, we'll see. But what I want to do is give myself enough time to let this work. And that means that at very closest, I'm going to look at the November 19 expiration. You can go out to the December 17 expiration. But what you will be looking for in terms of the strike is going to be the tricky part. Now, this is where it gets a little tricky. If I look at the 212s, there's not enough open interest there. If I get down to the 210s, I'd rather be slightly in the money than out of the money. Meaning if I'm looking at November 19 and I'm looking at an at or slightly in the money strike with some liquidity, all right, I'm probably going to have to focus on something like the 210. And if I look out to December, again, same challenge. Take a look at it slightly at an in or slightly in the money or at the money option that's going to drive me down to the 212s or the 210s. Okay, I can look at the 212. I'd love to see at least 500 open interest there, but if not, I'm going to have to go down to 210, which is really not a huge deal, quite frankly. But again, think about open interest at either, again, I don't mind that December 17 expiry. So 210 would put us in this area in here. That's fine. That puts us inside that zone. So as much as I'd love to play the 212s, I'll likely be somewhere in the 210s. No worries. So focus on that. That's the setup. That's the strike. That's the expiry. And I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.